hundreds of client files. And that's what was the difference in this whole thing. In fact, LLB knew they were so had that they came to the table and they said, we want to cooperate. And in fact, they worked with us and the U.S. government to change the U.S. government, the Liechtenstein government, and the parliament to change the bank secrecy laws that allowed for us to make a request by a letter from the U.S. Attorney's Office to the government of Liechtenstein down to the bank. They turned over the records. That's how much impact this program has had right now. So if your client has a bank account in some bizarre place, some other tax haven that we haven't gotten to yet, and they think they're safe, well, they might be for a while, okay? But that's what I want you to remember, because we are getting it, and it comes in, and it's weird, too. We don't know why. Sometimes it just does. And we have those records, and those are the records that are damning, and we'll talk a little bit about it later when it ties into willfulness, because that's the most key thing in this whole presentation is about the willfulness. So now, let me just throw one other thing for the estate planning part of this. So now you take that scenario where somebody comes in and says, I got an account, what do I do? And he's 85 years old, and he's trying to preserve as much of his asset base as he can for his children and whomever else. And he says, you know what, I'm 85. Come on, bring it on. What are they going to do to me? Okay? You might get that, and it's a realistic way to take it. They may say, yeah, you know what, why fight it? I'm not going to do anything. Let them come to me. The problem isn't them, it's the heirs. And the problem gets down to the fact when you start representing the children of these people, the 85-year-old that says, come get me, you don't have, and they're no longer here. You no longer get the details. You lose the ability to know who set up the account, where it was set up, where the original source of funds came from. Was it legal source? Was it illegal source? Whatever the deal may be, you lose the ability to get that information. And that's the important part. So from an estate planning side, I can see how this ties in directly in that scenario. So you have to consider those things. So I'll kind of buzz through, and this is what I was just talking about. Right here in New York City, we probably have done more than half of the prosecutions for the Swiss banks in the entire country, right here, at the 290 Broadway office. This is one of them, Wegland Bank, the oldest bank in Switzerland, we took down for this type of behavior. We also went after the Swiss external asset managers. They turned over, Swiss partners, turned over 110 client files. Okay? This is the thing about Liechtenstein, 200 non-compliant. And that's what they said. They weren't prosecuted, they actually were given a non-prosecution agreement because of their extraordinary cooperation. So for the people that think their banks aren't going to rat them out, the banks are ratting them out. And they're giving us the records and the ammo. Butterfield, another bank that's dealing with this stuff. And then recently, this is, you know, I haven't updated the press, but we're going after the bankers too. And a lot of these bankers, they're now, we've essentially locked them down in Switzerland. And they can't leave because they're all wanted. So now they're coming in and saying, please, let us out of Switzerland, we got to go. We just arrested a Swiss banker in Germany a couple of weeks ago. They're landlocked and they can't leave. So they're actually coming in and cooperating. They're going to rat their clients out. Okay, so Rob had mentioned the iterations of OVDP. It started off with that IRM section. Originally, that's what we dealt with. And to give you some context, right now we're about 50,000 voluntary disclosures. It's by far the most successful program of an amnesty type that the IRS has ever done. Originally, so this started in 2008, 2009 when UBS was in the news. The 3 preceding fiscal years, we did 88 voluntary disclosures total in the entire country. 5, 6 years later, 7 years later, it's up to 50,000 and we've collected $7 billion in revenues from that program. So it is a success. So what changed? And this is some of the things we're going to talk about. We'll go right down to you're allowed to do all of these things. You have to submit your statements, pay the penalty, and submit the records electronically. What happened too is it went from 27.5 to 50%. It was raised to 27.5 or 50% if your client has an account in one of these prohibited institutions, these facilitators. And let me just back up a step. The 50% is interesting because a lot of clients might say, why would I do this? Why would I come clean? Why would I give all my money away? Well, let me just explain to you that 50%, if you were prosecuted, Department of Justice policy mandates a 50% FBAR penalty, okay, on the highest aggregate account balance in whatever particular deal we're dealing with. 50%. That's the extent of it if you are convicted of it. However, what could happen is if you go to trial and you are convicted, the judge could apply 50% every year. Because that's the rules. It's $100,000 or 50% of the account, the judge is higher. So, you have a $2 million account, you go to trial and you're convicted of it, half of it's gone the first year. The next count, the next year, you didn't file the F-bar, it's gone. 50%, 50%. So now you've actually got fines that exceed the amount of the account. It's insane to think that way. So when someone says, I don't want to give up half my account, think about the worst case scenario, the criminal investigation, the prosecution, and what that could do. So think about it. You pay the IRS, you pay the penalties, you pay the interest, whatever's left, your lawyer takes from you, and your accountants. You guessed it. Okay, so you're left with nothing anyway. So the idea is to preserve as much as you can, and the IRS has made it fairly simple to come into compliance. And I say that because I know it's not really simple. Every individual case has a different fact pattern. These are in the current foreign financial institutions and facilitators. If your client comes in and has an account or connection to one of these, it's 50%. And the IRS did that because there's so much notoriety and press about it that they don't want to allow somebody to get into this late stage of the game without paying the price. Makes the earlier ones feel better, really, because if you came in early, you got a 20%. So the streamlined procedures, now U.S. residents were eligible. You didn't have the 15, you don't have to worry about the 15 being the cap. There's no risk questionnaire. But what you have to do now is certify that you were non-willful. And that's a separate form signed under the penalties of perjury. So that adds a whole new dynamic because the voluntary disclosure optional format letter and all these things you were doing, this is an additional, when you go to the streamline, now you have to submit one of those documents. It says, my failure to report all income, pay all tax, and submit all required information, returns, including F-bars, was due to non-willful conduct. I understand that non-willful conduct is conduct due to negligence, inadvertence, mistake, or conduct that is the result of a good faith misunderstanding of the law. That's everybody, right? I mean, I've never met somebody who didn't say that. Willfulness. This is probably just an aside on a regular criminal tax thing. Willfulness is probably the most important thing that you as lawyers and accountants can look to because it makes the difference. That's what we do when we bring criminal prosecutions. We look to see if somebody did this on purpose. I mean, people evade their taxes inadvertently all the time. I mean, you send out collection notices and people leave off 1099s. They do all that stuff. We get it. This is what we're talking about, though, in a criminal case. This is the most important. Was there a voluntary intentional violation of a known legal duty? You've got a knowledge of the requirement and you made a conscious choice not to comply. If that is true, then you could be considered willful. Yes, ma'am.